It's been one of the most successful practices that I've done. And really, it's a way to stop, it's a trick to stop the chart chasing and stop missing out on moves that could be really, really good. I got a question for you. Have you ever looked at a stock or an ETF and then for whatever reason you didn't buy it and it went higher by a lot? Of course you have. Everyone's done that. I've done it way too many times I can't recount. And I want to share with you a little trick, and it really is a trick of how you can stop doing that. And I call it sowing the seeds. You see, a lot of people, when they don't get into a trade or an investment, a lot of times it has to do because of the commitment, the monetary commitment that they're not willing to take. Sometimes it's also a lack of space in the portfolio. And for both of those situations, which are the majority of the reasons why people don't get in, there is a little trick, again, I call sowing the seeds. And sowing the seeds has everything to do with position sizing and a multitude of positions. So what I like to do is I like to, at any point in time, I reserve a part of one of the portfolios, roughly about 20%, to what I call the seed sowing part of the portfolio. And what I do is I try to have about 20 positions, very small positions, in things that I think have a lot of upside potential, but I'm not quite willing yet to put a lot of money to it. So let me give you a small example of why that's important. First of all, it's important because the amount of research it takes to do a serious investment actually takes time. But if I like something at the first sort of inkling of having done some little back of the napkin kind of research, a lot of times for me, it tends to be enough to then, when I do the more research, I look back and I see that the initial research is correct. So a lot of times it's worth it for me to get into these positions in small size. So let me show you an example here. I got a chart I took along of an ETF. This is just a cannabis ETF, and this could be anything, right? This is just an example, but this is exactly what I did. So in I think it was in the late summer, I think it was August, maybe into September of 2020, so last year as of this recording here, I started to invest in multiple cannabis-oriented stocks. This could be anything. This could be any growth story, right? So I bought some of the MJ ETF. I bought another ETF, and I bought, I guess, about 7 or 8 individual equities in the marijuana space, each very, very small size. Enough size for me to be involved, so that if it takes off, I will participate to some extent, but not enough for me to lose a lot of money if it really goes against me. The only way I'm willing to do this is by putting a very small amount in. So if you want to think about this, like, let's say I would have literally just bought, let's say, one share of this ETF at, like, say, $12, just one. Let's say then it would have moved to $15, right? Or let's say you bought it at 10, just to make a simple number. So you bought it at 10, moves to 15, that's a 50% rally. Pretty good, right? Well, at that point, not only have you made some money, but it catches your attention to do some more research, and then if you think it was something that you still think makes sense, maybe you buy more, right? Or you get out of it if it doesn't make sense anymore. But the point of what I'm trying to make is that this is a way to stop the FOMO chart chasing. This is a way for you to sow your seeds among many different growth areas. So let's say you like the cannabis space. Let's say you like the 5G space. Let's say you like the genomic space. Whatever it is, put a very small amount into each. Literally one share. I wouldn't necessarily buy options because options have an expiry, right? And you want to give these things time to work out. But the point I'm trying to make is if you put just a little bit of money into each one of these positions, you're dipping the toe, and it's enough for you not to get the fear of missing out chart chasing. Because at some point, let's say in this case, MJ is now rallied from 10 to 25 at this point. At some point, if you don't participate, you're going to end up buying the top or near the top. and that's what you don't want. And then you get scarred, and then you don't do it again. So sow the seeds. Let me know in the comments below, or however you want to let us know if you enjoy this. It's been one of the most successful practices that I've done. And really, it's a way to stop, it's a trick to stop the chart chasing and stop missing out on moves that could be really, really good by risking very, very little and then adding more if it makes sense after your initial move. So hope this is helpful, folks, and we'll see you soon.